Good morning. I'm Brian Curtis.
And I'm Doug Krisner. Here are the stories we're following today. So we had the CPI data. The numbers seem to support the view of the Fed being nowhere near declaring a victory when it comes to fighting inflation. So we had a big spike in yields right across the Treasury curve. Now, this blame for higher yields go well beyond the inflation story. The auction of 30-year bonds was very, very disappointing. We had the yield on the 30-year jumping 16 basis points to 4.85. Brian?
All right, let's get to news. House Republicans have been in closed session again today, trying to figure out how to elect a speaker. Ed Baxter is covering that story and has all the rest of the news from the 960 newsroom in San Francisco. Ed?
Yeah, that's right, Brian. We'll, of course, get to Israel as well here. The strife in the House today, though, in the U.S. has just gotten more and more frustrating. Now, the Republican nominee, Steve Scalise, says there has been some movement.
The good news is our support continues to grow. We're continuing to work to narrow the gap, and that's going on, and we're going to continue the meetings.
Yeah, but not anywhere close to this point. And House Minority Leader Hakeem Jeffries says it's simple.
Republicans need to end the GOP civil war. Now, what is the problem?
Well, the problem is that the speaker chair is being held hostage by that same small group of Republicans, and Bloomberg's Julie Fine says they're not closer.
Yeah, it certainly doesn't seem that way. I mean, you have one representative essentially saying, a Republican, that this is like an episode of Veep that turned into the House of Cards. I mean, that is not where you want to be when there is a war going on in Israel. Aid is needed. There are questions about aid for Ukraine. So at this point, it appears they are no closer. You even have Mike Rogers basically saying, we're going to need Democratic votes. Nothing that I ever thought would happen this week. So they have a long way to go and a lot of work to be done.
Now, that Republican congresswoman to whom Julie referred is Congresswoman Nicole Malliotakis.
If it's not going to be Steve, we need to figure out who it is. But somebody has to get the 217 that is needed so we can proceed with our legislative business. It's only going to make things worse if we don't get to pass the appropriation bills that need to be passed and send them over to the Senate now. That's delaying a process. And then they're going to be all upset in a month when we get stuff back from the Senate that we're unhappy with, and there's no time to negotiate.
So, House of Cards? Israel, Hamas, U.S. Secretary of State Antony Blinken today with Israeli Prime Minister Benjamin Netanyahu.
The people of Israel have long and rightly prided themselves on their self-reliance, on their ability to defend themselves, even when the odds are stacked against them. The message that I bring to Israel is this: you may be strong enough on your own to defend yourself, but as long as America exists, you will never ever have to. We will always be there by your side.
The massacring of young people in an outdoor music festival, the butchering of entire families, the murder of parents in front of their children, and the murder of children in front of their parents.
Netanyahu says Hamas should be treated like ISIS. They should be spit out from the community of nations. Nobody should harbor them or protect them. Blinken saying aid will continue while there's been no direct tie to Iran. He says it is complicit, which is a reason Bloomberg's Nick Wadhams on Bloomberg Sound On today says Secretary will expand his trip to the Middle East for more countries.
You know, if you have further evidence of Iranian involvement in the Hamas attacks, what's Israel going to do to Iran? And so it could get a whole lot worse and a whole lot bigger.
Nick says that Blinken is trying to prevent that, of course. Already expanded a bit as Israel's missile strikes have put Syrian airports out of service, sending a message to Hezbollah in Syria. And the U.S. has confirmed 27 Americans have been killed in Israel. 14 are unaccounted for. Global news powered by more than 2,700 journalists and analysts in over 120 countries. In San Francisco, I'm Ed Baxter, and this is Bloomberg. All right, Brian.
Ed, thanks very much. And we will continue our coverage on this story all throughout the day here on Bloomberg. The U.S. has reached an informal understanding with Qatar to hold off on distributing $6 billion in oil revenue to Iran. Iran was allowed to access the money as part of a prisoner exchange with the United States. Today's news comes as the Biden administration probes Tehran's potential involvement in the Hamas attacks last week. At a White House briefing, U.S. National Security Council spokesman John Kirby did not directly answer if the funds were inaccessible to Iranian officials, but he did stress that all $6 billion remains unaccounted for.
It's still sitting in the Qatari bank, all of it, every dime of it.
And that is John Kirby. Qatar has been asked by the United States not to approve applications for the funds. Iranian organizations were meant to spend the $6 billion on medicine and other humanitarian goods.
China made its first public contact with Israel today since last weekend's attack by Hamas. We heard from China's special envoy on Middle East issues. He is Jia Jun. A statement from the foreign ministry said that Jai said China's condemning the actions that led to the deaths of those civilians. The statement went on to say that China is willing to work with the international community toward peace talks. Earlier, Israel's ambassador to China had called on Beijing to leverage its close relationship with Iran to rein in Hamas. Irit Ben Abba told us she is expected China to say a little more on the war.
If it really wants to see stability and to be more active politically in trying to bring peace in the region, it has to be more involved and to take a more balanced, much more balanced and much more realistic approach to the situation on the ground.
That is Irit Ben Abba, the Israeli ambassador to China. Now, by the way, China's foreign ministry said it was saddened by those casualties. However, Beijing has not criticized Hamas in its statements. Brian.
And Doug, it's the type of statement that has drawn criticism in the past on charges that China sits on the fence all too often in stories even like this, where there was a lot of carnage. And again, Israel tried to get beyond it by simply saying China should press Iran to rein in Hamas. And the reason I mention this is we'll have this with our guests all throughout the program, whether or not the Chinese response has been appropriate. Well, in some other news on China, consumer price inflation is likely to have remained near zero in the month of September. Bloomberg's Bonnie Au has the story from Hong Kong.
Bloomberg economists see the CPI rising 0.1% from a year earlier in September, the same pace as in August. Higher energy costs likely offset weakness in food prices. Overall, economists expect inflationary pressures to remain subdued for the rest of the year. On producer prices, Bloomberg estimates that they probably continued to fall, but by a smaller margin compared to August. Economists say it will take some time for recent policy support to fuel enough demand to lift prices, but they add there have been some early signs of green shoots in manufacturing. In Hong Kong, I'm Bonnie Au, Bloomberg Radio.
And staying in China, Beijing is expanding its clampdown on offshore brokers. The story from Bloomberg's Yvonne Mann in Hong Kong.
China has told its security firms and their offshore units to stop conducting illicit cross-border business. This would include brokering shares and selling funds to domestic investors. And that's as China aims to plug regulatory loopholes that could risk financial stability. Chinese authorities are increasing scrutiny to prevent people from evading capital controls. Meantime, authorities have also been rolling out measures to restore confidence in local markets after stocks tumbled. In Hong Kong, I'm Yvonne Mann, Bloomberg Radio.
Well, back in the United States, consumer prices rose at a brisk pace for a second straight month in September. The so-called core reading that leaves out food and energy rose 0.3%. On a year-over-year basis, it was up 4.1%. We got reaction from Sarah Malik, CIO at Nuveen Asset Management.
I think this just puts back on the table one more rate hike before the end of this year. Then the Fed pauses and yields should start to settle from there. So we're in the late innings of this cycle of rate hikes, even at this point.
That's Sarah Malik. Traders priced in nearly even odds of a 1/4 percentage point hike this year. Well, let's get to our guest. Our guest is Edward Harrison, Bloomberg team leader for the Americas on FX and rates. I'm Brian Curtis, along with Doug Krisner. And Edward, the headline was a little hot, but core was perhaps we could say ho-hum. I'm not sure it would have ruffled markets too much if the headline was also in line. But in any case, we have seen oil prices trade down 7% in the last month, and even more than that in the month of October. So I didn't lose any sleep over this report. Should I have?
It's a good question. I think that the real question is what's the state of the markets given this? Because that's sort of what you're getting to is that the markets reacted very violently to this. And I think that's a statement to where markets are. But I would say with regard to the data that there were some negatives there. In particular, the super core services number, that's where you take out you just look at services and you look at the core part of services. The inflation levels there for the month-on-month read were the highest that we've seen in quite some time. And I think that's what people were focused on, that, that there's a sticky part of inflation. And so after 1 or 2 days of respite, what we've seen, therefore, is the bond market selling off, a steepening of the yield curve based on that. And more than that, it was the actual 30-year Treasury auction that caused bond markets to sell off. And I think so. It's a combination of those two things.
Yeah, it's been a very tricky week for the bond market, complicated by the fact that Monday we didn't trade given the banking holiday. And then with the developments in the Mideast, what may have been certainly felt like a massive short squeeze in bonds that drove yield sharply lower. Pretty dramatic reversal of that today. Brian referred to some of the markets and how they're discounting the probability of a future rate hike. It's kind of interesting because futures are saying something different than what the swaps market is indicating. Nonetheless, I think there is a really low probability of another rate hike. What could scuttle that? What would force the Fed's hand, do you think?
I think there are two things that the Fed probably wants to think about. They want to think about the PCE inflation. That's a different gauge of inflation that they track more closely. And they also probably want to look at GDP, which is a backward-looking number, but from an optics perspective is very important because they put out forecasts in September that said they were going to get to certain levels on unemployment and inflation, and we're about where they wanted to be, but the level of the Fed funds rate is 25 basis points higher with that. So if we get a very hot number in either one of those two, then likely they'll feel compelled to, between November and December, one of those two meetings, to throw in one last 25 basis point rate hike. But really, everyone's now focused on how long they're going to stay at that level as opposed to that extra rate hike that they're likely or unlikely to put in.
Just looking at the daily chart, it seems to me that the 30-year auction, the fact that didn't go so well, really caused a little bit more of the dislocation than the inflation numbers. But I take your point that both were contributing. I'm interested in your thoughts on the housing side, because if you look at information that is seen as more real time, like the Zillow numbers on rents, they show increases that are really kind of back down almost in the high 2% range, which doesn't seem that alarming.
Right. Yeah. And I think that the Fed, they're fairly forward looking. So to a degree, you could say that they would look through these numbers, that, most of the things are coming back to trend, but not quickly enough. And so the question for them is at what level, at what plateau can they stop hiking and then hold? So that's why I think there's probably, one more hike, as they said, maximum, and then they're probably going to hold at that level, and hopefully that will do the trick for them. But going back to what you were saying there, Brian, about the whole concept that it was the 30-year, I agree with you 100%, that, we saw, break evens which show inflation rising as a result of the CPI numbers. But then suddenly when we got the 30-year auction, that completely reversed, and it was really all about the real yields rising. That is indigestion, if you will.
No doubt about it. I mean, the bond market has really been forced to absorb a tremendous amount of new supply from the Treasury. So this is only going to become even more challenging.
Yeah, and I think the thing that people are looking forward to is the November, when the Treasury comes out and says this is what our refunding is going to be for the next 3 months, and the numbers there, if they're very high, then I think the market could recalibrate expectations based upon that. And it's the term premium, how much you're willing to pay in order to hold a longer maturity asset that is going to drive these yields higher.
Yeah, the spike in yields seemed, too far too fast. And then the drop, the consequent drop of 33 basis points in about 24 hours seemed kind of shocking, too. Are we almost now, do you think, finding an equilibrium level here with the 10-year yield kind of right around the 470 level?
To be honest, I don't think that we necessarily are. I've been tracking the move from April when right after SVB went bust, and the channel that we were on up until maybe a week or two ago, we were within a certain channel. We've broken outside of that channel, so we're slightly above. That means that we're accelerating in a potentially unsustainable way.
This is Bloomberg Daybreak Asia, your morning brief on the stories making news from Hong Kong to Singapore and Wall Street.
Look for us on your podcast feed every day on Apple, Spotify, and anywhere else you get your podcasts.
You can also listen live each day on Bloomberg 1130 in New York, Bloomberg 99.1 in Washington, Bloomberg 106.1 in Boston, and Bloomberg 960 in San Francisco.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130.
Plus, listen coast to coast on the Bloomberg Business app, Sirius XM Channel 119, the iHeartRadio app, and on Bloomberg.com. I'm Brian Curtis.
And I'm Doug Krisner. Join us again tomorrow for all the news you need to start your day right here on Bloomberg Daybreak Asia.